I'm Chartered, your accounting tutor. In today's video, we are going to still emphasize on the principles of double entry, the introduction to accounting, principles of double entry. The emphasis of today's class is to still emphasize the principles that are used in trying to post transaction into ledger account. And I told you that the fundamental principle remain debit the receiver account and credit the giver account. And any debit entry must have a corresponding credit entry and vice versa. But we have emphasized this in my previous video. So today, this is not the concern, but I'm going to give you other complementary principles that are used to post transaction into ledger account, because most learners find it difficult to understand the receiver account and the giver account. And that is why I am introducing other complementary principles that will help you post transaction into ledger account without any problem. And let's look at it. These are the principles. We now say all purchases are debited. All purchases are debited. Mind you, I told you that purchases in accounting are goods purchased for sale. Goods that the business acquired for sale, for resale. Any goods that the business buy with the intention of reselling or reselling them are referred to as purchases. Then we are saying that all purchases are debited in double entry system of bookkeeping. Look at the principle here. If you now open an account, a ledger account, and the heading of the ledger account is purchases, it means it must be debited. That is, when goods are purchased and you open purchases account, it must be debited. And that's when I say that all purchases are what? Debited. Though there are other areas where purchases can be credited, but there are very rare cases that when goods are withdrawn for personal use. But by and large, all purchases in the business are what? Debited. And that's why we now come to understand that all purchases are debited. So anytime you open purchases account, mind you, if goods are acquired or purchased by the business, it must be recorded in the debit side. The second one we now say all sales are credited. All sales are credited. Sales are the goods sold by the business. So if you now open sales account, mind you, it must be posted in the credit side. You open sales, a ledger account, and the sales in the heading, mind you, it must be posted in the credit side. If you want to get it right, you post in the credit side, but if you post in the debit side, it will contradict the principles and you will not get it right. Next, we are now saying all expenses are debited. All expenses are debited. Mind you, in my previous video, I mentioned what are expenses. Expenses are the services paid for by the business. Services that the business received and they paid for the services. What are them? Such as wages, salaries, electricity, printing and stationery, and many other expenses, electricity bill and what have you. So all expenses, it means if it is rent is an expense, then it must be debited. There is no account called expenses account on a good day. So we are saying that if the account you open, be it rent paid, be it insurance paid, be it electricity paid, be it printing paid, and any expenses at all, salary and what have you, it must be posted in the debit side, provided the business paid for the services. And that is why we now conclude that all expenses paid are debited, or all expenses in accounting are debited. That is, if an expense has been paid, make sure if you open the expense account and the name is either rent, insurance, electricity, wages, printing, stationery, and what have you, you must post it in the debit side and you'll be 100% correct. Next, we now say all revenue are credited. All revenue are what? Credited. Revenue are the income that the business earn in the process of the day-to-day operation. That is the money that the business earn from the services or the goods they sold. And that is why the key or the number one revenue is sales. Because when the business makes sales, the business get money or the business earn money. But it is not the sales that is revenue. Revenues are things like rent received, commission received, interest received, and what have you. These are what we call revenue. And by the time you open an account and the account is revenue, mind you, it must be recorded in the credit. And that is why it says is credited. Though I singled out here because sales is commonly found in double entry transaction where I sold goods, sold that. That's why I decided to single it out here and treat it separate. By and large, all revenue are credited, which sales is also the main item under revenue. So here, anytime you open revenue account, be it interest received, commission received, rent received, any value received by the business in form of revenue which will add value to the business, such account should be credited. Next, we say all liabilities are credited. All liabilities are credited. Liabilities in accounting are the amount that the business owns outside that. It can be trade, payable, that's what we call creditors. It can be normal owing, either you're supposed to pay rent and you don't pay, or many other liabilities. In liabilities, what things like non-current liabilities and current what? Like things like loan, borrowing, and any form of amount that the business owns to outsiders are referred to as liabilities. And if you open such account, mind you, it must be posted in the credit side. And that's why we now conclude that all liabilities are what? Credited. Be it loan account, be it trade payables account, be it rent owing, provided that account is a liability, mind you, you must post it in the credit side and be 100% correct. The next one now says all returns outward, all returns inward are debited. I mean to say, return inward are the goods purchased or the goods sold out to customers, and the customer decided to return them back. So as the customer return them back, it means the business will receive them. Mind you, from the principle, all receivers are debited. So if goods are being received back, it means they will receive and that account will be debited. And that's why we now conclude that all returns inwards are debited. This will be goods that have already been sold out. If they are returned, then it means if you now open returns inward account, then it means it will be debited. As you can see, we now say all returns inward are what? Debited. All returns inward are what? Debited. I try to skip something, but let's still go back to it. Whereby I say all drawings are debited. All drawings are debited. Drawings are the goods or money that the owner takes for personal use. If goods or cash or money in the bank is taken by the owner for personal use, we refer to as drawing under business entity concept, whereby we now say the owner is different from the business. So if drawings are taken out to the business either by cash or by way of goods, it means as you open drawings account, such transaction must be posted in the debit side. And that's why we now conclude that all drawings are debited. If the heading is drawings in the ledger as you are preparing your recording your transaction, mind you, it must be posted in the debit side. If you post the credit side, the transaction will be wrong. Then I already explained returning. We now go to return outward. Return outward are the goods the business return back to the suppliers, whereby the business purchased goods and some are not what they want, they are not according to specification, then it means such account will be credited. And thus we now conclude that all returns outward are posted in the credit side. So mind you, if you open return outward account, mind you, that ledger account must be posted in the credit side. Then we now say that all capital are credited. Capital is the amount that the business use or the owner use in starting business. So capital must be given. Capital must be given going by this principle. But here, just understand that as you open capital account, and that capital, the main meaning of capital is the amount that the business used in starting business. It can be cash, it can be money in the bank, it can be even be assets. You can use a motor vehicle that originally was your private motor vehicle. By the time you put it to start the business, it becomes capital. It can be furniture, it can be anything, but provided that item is used for starting business, it becomes capital. So if you open an account of capital in that regard, mind you, you must post it in the credit side. And that is why we now say that all capital are what? Credited. That is, capital means the value used in starting business, either by cash or assets or anything. Now, lastly, we say all assets purchased are debited. I use the word purchasing here because that is assets acquired by the business. If The business acquire assets in form of motor van, land, building, and all form of non-current assets purchased by the business. Mind you, that account must be. I'm not talking about selling non-current assets. That is when non-current assets are purchased. Either you buy land, you buy building, furniture, call them all form of non-current assets used by the business. If you open such account, it must be in the database. But if we sell it now, it becomes revenue. As I say, all revenue. When you are selling to get money, then it becomes revenue. That's how the word purchases. They are all assets purchased or acquired by the business. If you open such account, mind you, it must be posted in the daily side. And that is why we now say that all assets are debited. That is, all assets purchased or acquired by the business. If you open the account, be it motor van, be it furniture, be it equipment, be it anything acquired by the business for the purpose of using it for any future economic benefit, mind you, that account must be posted in the daily side. So you now follow these principles to be able to understand how transactions are posted in the ledger via the complementary principles. So if you find it difficult to understand the receiver account and the giver account, you can just still rely on the principles to post all your transactions to ledger account without problem. If you have any comment, if you have any problem, you can go down the comment section, comment, ask your question. I will still come back to clarify and give you more explanation as to regard the accounting principle. Thank you. We see you in the next video.